Hello, I'm Aurora Davidson, CEO of Amerigo. We just released our 2023 annual financial results, and I want to provide some additional comments to shareholders and investors. We had a challenging year at Amerigo, with a 10% year-over-year hit to production and a 15-cent lower average annual copper price. However, the resilience of Amerigo's capital return strategy shone through. Despite a revenue fall of nearly 11 million, and a 14 million decrease in EBITDA, we upheld our commitment to shareholders and paid 4 more quarterly dividends. We have reasons to be optimistic in 2024. Our exceptional operating team at MVC delivered a strong fourth quarter. We are back on track, generating cash to return to shareholders through regular dividends, share buybacks, and performance dividends, each activated under specific market conditions. We just declared our 10th consecutive quarterly dividend with an annual yield that is best in class. In the fourth quarter, we produced 16.4 million pounds of copper at a price of $3.82 per pound. Our Q4 EBITDA was 11.2 million. Net income was 3.9 million, and free cash flow to equity, which is, in my view, our ultimate financial performance measure, was 6.5 million. In the last 3 years, Amerigo has been a consistent story of returning capital to shareholders, and we kept this commitment in 2023, returning 17.2 million to shareholders. Investors who were with us throughout 2023 were paid handsomely to wait for the recovery at MVC and the strengthening of copper prices. We continued paying down our bank debt and repaid all outstanding leases. By year end, our debt was down to 20.7 million, and we had cash and restricted cash of 22.5 million. This strong financial position should give you a sense of security regarding our ability to continue returning capital. The strength of our capital return strategy comes both from our ability to generate cash and from the conservative construction of the strategy itself. It is a robust and adaptable strategy. The additional mechanisms, which, as you know, are share buybacks and performance dividends, are designed to be activated when copper prices rise and show that we are prepared for positive market fluctuations. Looking at 2024, the fundamentals of copper supply and demand continue to work in our favor, and the market surplus projected a few months ago has flipped to a projected deficit on shocks to global supply. The recent production downgrades from various major copper producers are more significant than the positive impact of companies that are announcing production increases this year. And we continue to look at around 5% or 1 million tons of copper per year of supply disruptions due to politics, geology, rising costs, and lack of investment. This creates upward pressure on copper prices. The long-term challenges of increasing copper mine supply and the increased copper demand profile emerging from global electrification goals remain in place. In this environment, Amerigo's strengths are evident. We have a long-term contract to process tailings without exploration or geological risk. We have no jurisdictional risk, as our contract is with Codelco, the Chilean state-owned copper company. We have no counterparty risk, as we sell our copper concentrate directly to Codelco. Our sustaining capital expenditures are minimal, as is our debt level. In other words, we are primed to maximize returns to shareholders as 2024 unfolds. This year, we expect to produce 62.4 million pounds of copper and 1.2 million pounds of moly. Our January financial results are on track. We are generating cash, and cash balances should build in line with rising copper prices. In 2024, we will make scheduled bank debt repayments of 9.75 million plus interest, and our bank debt at year end will then be down to 11.5 million. Under our 2024 production and cost guidance, the quarterly dividend of 3 cents per share is safe at current copper prices. We have temporarily suspended share repurchases due to the financial impact of our lower 2023 production. But as you know, we renewed the normal course issuer bid, and we can repurchase up to 10.9 million common shares for cancellation this year. With rising copper prices, the company will again be positioned to buy back shares. And in addition to quarterly dividends and share buybacks, stronger spot copper prices and a more robust copper price outlook will eventually translate into the deployment of performance dividends. The yield on Amerigo shareholder is paid to wait, while copper prices remain range-bound, is best in class. This year, with no operational impediments, the potential to return additional capital should also be apparent, and this would boost our yield even further. We believe, however, that as the market better understands the stability of our business and our capital model, and with strong probabilities of higher copper prices, our share price will be bid up to bring the investment yield down to more appropriate levels. That means Amerigo will shine as a total return vehicle for investors. In my mind, it is one of the best out there. We look forward to another successful year for Amerigo and its shareholders. With that, I will end this video. Please remember, you can download our financial statements, MD&As, and news releases from Amerigo's website. Thank you for your interest in Amerigo.